Welcome to the StockMiner.com studios. I'm your stockminer, Brian Johnson. I don't even know what to say, guys. What is there to say about today? How boring was that, huh? Yeah, one of those days where you want to be doing anything else. And usually by the time the first 3 or 4 hours of the market go by and you don't see much of a move, you can be pretty safe to assume that things might happen, something might happen in the last hour, but otherwise there's probably not a whole lot going on and you can find something else to do. There were some stocks that did move today, so if you have individual stocks that you were following, those would have been a great opportunity to at least browse over to see if there were any trades available. But as for the markets themselves, oh my, what a boring day that was. 10,494 for a low, 10,578 for a high. When you're dealing with about an 80-point move in the Dow from high to low over the course of an entire day, you're not talking about much movement at all. And evident here by the charts. So we did not get a break above, we did not get a break below, hence no real trading, no real entries at all today. If you are still long and holding long, then there really wasn't anything to panic about today. This could be just consolidating for another move higher as we continue this, what I believe to be a wave 3 upwards, just continuing its slow grind to the upside. From a daily standpoint, you can see that little tiny candle we put in today. It was up ever so slightly, but certainly nothing all that convincing. The volume over the course of a day was also pretty drab, really not much going on the way of volume. So, markets consolidate, waiting for another break. My levels to watch are still above 10,600 on the Dow, and then back below about 10, let's call it back below about 10,400. Might give you an opportunity here for a short on the Dow itself. Watching then this blue line above you, break above 10.7 or 10.600, maybe a little bit at 10.700, but really I think 10.900 is a very possible projection for the Dow then. NASDAQ on a 60-minute also doing the same thing, down 159 today. I just have to chuckle. It just makes me giggle. The markets don't do anything. How boring is this? However, we do have this 20 period moving average rolling up and through here. This could act as a really good launching pad for the markets themselves. Price action rolls sideways, moving average rolls up. They touch one another, and pow, that support happens, and it starts to take off to the upside. Then we're looking at that 19, 15, 19, 17, whatever type area up here. Yes, this is a potential reversal candle, so we will have to watch for confirmation, but it's only a potential for the time being. So we'll see if Wednesday brings about any further bullish action, and if it does, I'm looking at this area right here for your next heavier level of overhead resistance. NASDAQ on a weekly, it's only Tuesday, but we're going nowhere as of today. Nothing else to look at there. SPX moving sideways as well. Here was something that was very curious, and that was the fact, or what we did in the morning. Notice how we gapped up and then slowly kind of ran backwards here, covering all of about 10 points today in the markets. My no-fly zone, guys, was right around between 11.13 and 11.25-ish. Somewhere in there is my no-fly zone. I did not want you trading in there. Recommended that you didn't waste your time. Let it break one way or the other before making a move on it, and you can see why. We had a gap up, and it ran right back down. And that little move today, gapped up, right into overhead resistance. Textbook. So we got the gap up today, but it did not gap up and over this area of 1125-ish is where I would have liked to have seen it gap up and over. It gapped right into this overhead resistance at around 1120, held there, and then pulled back the rest of the day. Now, we did get a close at the 200-day moving average, so potential reversal candle, yes. Confirmation has to come in first before we can make a move on that. Levels are still the same for me. Really, your most conservative entry here is above 1125 and below 1100. Those would be the places you'll be watching. SPX on a weekly, really going nowhere, holding right between the 50 for support and the 20 for resistance. VIX on a daily. This was curious. Markets went nowhere. VIX started to move up. There's your divergence. Will it make a difference? Who knows? But keep in mind that while the markets went nowhere today, the VIX did not confirm that and did show signs of fear, at least for the day. Does it change anything in the overall appearance? No, it doesn't. It's still pouring. It's still not pouring, but fear is still coming out of the market here, which doesn't bode well for the bears at this time. And on a weekly scale, we're still holding up in these levels. Ultimately, for me, we're still back into kind of the green to yellow type area for fear. This isn't a lot of fear down in this area. And we still have a lot of week left. Wednesday, Thursday, Friday left to trade. But watch the VIX. Curious today that the VIX did not confirm what we were seeing in the markets. Apple on a 60 got a great move today. Look at that 260 area that we talked about. Notice how we got the gap up and over it, came back to retest it, and then we took off from there. This is precisely the type of move you want to see when things gap up. You don't want it to gap up into overhead resistance. You want it to gap up and over overhead resistance. A lot of times you'll get exactly this type of price action when that happens. So a great play from here. Great opportunities, whether you got in above 2 at the very, very beginning of the morning or above 262 or whatever, you still could have made a couple dollars on Apple. If any of you are options traders, I love options and have no problem trading options during the course of a day in Apple on occasion. I don't typically like to buy options that are like in the front month, unless of course I know I'm going to be in and out of them the same day. Just the time decay will eat you up if you play them and hold for any length of time. But I like to play these, and these can offer some really good profits if you know what you're doing, if you know how to play this type of stuff, and you know what options to buy. Man, you can really make some really good money off of a really small account. So I would invite you to get an education, a very solid education in your trading if you like to trade options and or have a small account, something below 10,000 or something below maybe, $5,000 account. Sometimes options are a beautiful thing, but if you don't know what you're doing, they will tear you up. So make sure you get an education before you start dabbling in the option side of things. From a daily standpoint, we did break that level. That was my about 262, 262.50-ish level, somewhere up in there. Still giving you opportunities for gains today. From a weekly, still trying to poke its way upwards back into this 270, 275 area. FAS on a 60-minute then got the gap up above all this stuff, and then bled itself back down right into support. As long as this level holds, still is bullish overall for it. However, that's that overhead area. Once again, we got a gap up, ran to it, turned around, and ran right back down again. So that candle is not the most bullish. You will want to be careful with this, being how it is a very strong overhead resistance area. So wait for breaks up and over this before you start thinking about going long the FAS. Otherwise, most conservative entry to the short side is really kind of back below $22, $22.25. Somewhere below that 50 is probably your best bet at a short. And even then, maybe not for any length of time, like a day or so. FAZ on a 60-minute, gap down, run up. Okay, so what does that mean? If this is a 1, 2, 3 down, maybe this was the end of 3, and maybe this is into some sort of a whatever. 4 wave, maybe there's still a 5 down, who knows. It's anybody's guess. Just keep in mind that up over 14 is now your best and most conservative place to get long. Back below 13 is the place to get short now. It was 13.50, but with the gap down and the run back up, you can see people trying to hold on to this level. So back below 13 now. Above 14 to go long, below 13 to go short. I see that same thing being played out on the daily, so you'll want to watch carefully. If you want to swing trade this and try to hold for any length of time, you want to get in over 14.50, but I'm still not suggesting that you hold overnight on FAS or FAZ, especially for you more conservative traders. It's just not prudent at this juncture with FAS and FAZ. Not really going anywhere, just chopping sideways over the last few months. Let's find a trend and wait for that moment then to take a longer term trade in these. That'll do it for today, guys. Boy, it was So slow today. And this is all part of trading. Sometimes you go to work and there's nothing to do and you feel useless all day long. Sometimes you go to work and it's everything at once. All the sheeple come in and they want stuff done right now at this second. So then you're really busy all day long. And the markets are the same way. They're just consolidating right now, waiting for the next move, whether that's up or down. We don't know, and that's why we're going to wait for breaks of support or resistance. The market does not care what you think it's going to do. It's going to do what it wants to do. You just have to be prepared for it and stay on the right side of the trade. Best way to do that? Let it break the more major levels and make your plays from there. Okay, guys, be back with you again tomorrow. Hopefully there's something to talk about. If not, maybe I'll just tell a story. All right, have a great night. See you tomorrow. Bye.